Dinesh Kumar Khara, who is the MD of SBI. Thank you so much for taking time out. And now, majority on the street are expecting a status quo from the Reserve Bank. Run us through what your expectations are. Do you think that we will see a status quo this time around, but perhaps a change in the stance to hawkish versus neutral?
Well, I think considering the fact that the growth rate is expected to be about 7%, but at the same time we also have a challenge of inflation going up to the extent of about 5%. But at the same time, much of the inflation will also be affected depending upon how going forward, how do we address the challenges relating to the supply chain related efficiencies. Because if you really look at it, as far as the agricultural commodities are concerned, many of them are actually prevailing below the MSP. So that is the kind of a thing which I observe as far as the economy is concerned. So under these situations, we expect the policy to really have, I don't expect any change as far as the interest rates are concerned or the policy rates are concerned. And I expect it will be wait and watch effort on the part of Reserve Bank of India also. That's what my understanding is.
What do you have to watch out for? I mean, what about rate expectations for 2018? Do you see the higher possibility of rate hikes in the year?
Actually, if you really evaluate the situation, if at all the growth rate is 7% plus, and suppose if the GST collections goes up, in that event there is a likelihood that we may not see the fiscal deficit as it is envisaged, so it may be even lower. So if that happens, that will have an impact on the yield movement as well. And so I think there are multiple factors which will have a play. So I think about a next year for the remaining part of the current calendar year, there would be many such situations which would need to be looked into before taking any call. So I think it is too premature to really indicate any kind of an expectation, because much of it will depend upon various factors, both domestic as well as international. So I think that's how I read the scenario as of now.
And now the bond markets are under pressure, and what is your assessment of the current liquidity situation? Are there any measures that you see from the RBI on the liquidity front, or do you see more OMOs?
I think again this will be it will vary from time to time. So the way the global market is behaving, so that has an impact on the liquidity flow within the country. So how long will it continue? That is something which will have an impact. So I think they always have an option depending upon how they read the scenario, and they can always go for OMOs and can affect the liquidity position in the market. So I think that's a tool which is readily available with Reserve Bank of India. But much of it is something which is it's a variable factor depending upon many of the factors, not only in the country but also across the globe.
Right. So we are seeing better credit offtake versus deposit growth, and deposit growth in the system is slowing. Do you see higher supply of bonds versus demand to further put pressure on bond markets then?
See, the point is that credit growth which is seen now is around 9%, and the kind of deposit growth is seen around 4% kind of a thing. So, but there is always there is a lot of liquidity which is there in the system already, and that is also deployed in short-term instruments. So that also can be unlocked and can be deployed for credit depending upon